Afternoon and welcome to this business briefing from the UK and Ireland Spill Association. The purpose of this briefing is really to bring people up to date. For business owners, commercial directors and finance managers, this has been a very difficult year through which to navigate any business. And irrespective of size, there's been no insulation from the impact COVID will have had on those businesses. It could be it created opportunities, and some of our members have moved into decontamination of premises and even vessels and other facilities. Some have seen a reduction in planned work, but a modest increase in reactive work. Some have seen all face-to-face training stop and have moved their courses online. So in a difficult business environment, COVID has made it a lot tougher, with great demands placed upon directors to make decisions that balance the interests, balance the business need of their stakeholders. So they would be shareholders, employees, customers, creditors, and at times when the business debtors would be under the same or greater strain as your own business, making financial planning and cash flow difficult, and of course, uncertain. So far, thank goodness, whilst members have found it difficult, all of our members are still trading. Only one business, a small training company, have ceased their membership, but hope to return once training gets back to normal. So I thought it timely to have a briefing to ensure that we're helping you access advice and support at a time when you may need it, prior to the slowdown that usually occurs in December and January, when there is the Christmas and New Year break in work. Clients tend to stop commissioning new work until the new year and do not like having work done from mid-December to mid-January. So it's really difficult time to make a start. It's a very difficult time to plan. So to start, we have a series of 3 presentations today. Our first presentation is from Paul Mead Accountants and what current business support is available. The second is from Forrest Brown on R&D tax credits. And this is really to encourage you to claim for any innovation work you do. And then to finish is one to think about exporting and encourage you to think about exporting and growing your business beyond our own shores. So to start with, I'd like to introduce David Poole of Poole Mead Accountants. They are the association's accountants. David and his team help small and medium-sized businesses in Hampshire and beyond, and have provided cost-effective professional support in a friendly manner to the UK and Ireland Spill Association. And I think you'll find what he has to say useful and a good guide to some of the things you may wish to be thinking about as we approach the end of 2020. So I'm just going to share my screen with his presentation and hand over to David.
All right, thank you, Mark. As Mark said, we look after owner-managed businesses. I've got a slide up here, 30 seconds on Poole Mead. So our client base is owner-managers. We look after businesses that are not in the audit category, so anything that turns over, a few £1,000s to 10 million turnover. We cover a lot of work for most of our clients, including payroll, for instance, which may be relevant when we look at coronavirus. And our biggest payroll is a client with 30 staff, but we've got a lot of clients who are sort of 1, 2 and 3 man bands. So as Mark said, COVID has been very challenging. We are informed through various sources of changes in the rules every week, certainly. Sometimes it feels as if every day. So what I hope to do is to sort of not tell you stuff that you already know, but just point you perhaps in the right direction. And if things have changed, to say these are the changes that you need to be aware of or may be of interest to you, and hopefully be of some help that way. So again, as Mark said, the problem for all businesses is how do you plan, how do you adapt, how do you survive? And this is particularly problematic when actually you don't know what the rules are, and the rules change all the time, and you don't know when the end is. No one knows quite when we're going to come out of that. And when we do come out of it, how long it will take before things get back to what's said to be normal. Irrespective of that, I'm working on the basis that many of you are looking for ways to batten down the hatches rather than ways to expand and grow. And the way most businesses do that, I've listed six sort of categories here. Generate more income, generate different income, reduce costs, borrow more money, sell part of the business, attract investment. And in reality, I think at this stage in the COVID cycle, probably for many businesses, it's the two middle categories, reduce costs and borrow more money, that are actually what we're looking at. Reduce costs, we're probably looking at property or more likely to be looking at staff, potential redundancies. And the problem with borrowing more money is, is it the right thing to do? Have you got any option? Where do you find the money? And these are the things that the government has stepped in and helped with. So they've provided a degree of financial support, and I've listed sort of three categories. The first is direct contribution to your business costs. The second is easier business finance. Now, they haven't given money away by way of bank loans, but what they have done is encourage lenders to make finance more accessible for businesses where, maybe profits are falling, you may be making losses, your balance sheet is getting weaker, all the things that banks and lenders don't want to see. So at a time when you needed money most, or you need money most, the lenders were culturally putting up barriers to you obtaining more finance, and the government has stepped in to ease that problem, and I'll talk about that. And then finally, to potentially fund new job opportunities, this is the Kickstart scheme, and I will come on to that later in the presentation. So those are the sort of key areas of financial support that apply to small and medium-sized businesses, which you all are. So if we start with contribution to costs, the government immediately, COVID became a problem, started to throw money at it, and their initial approach was to let everybody who had a business property and with rateable value below a certain figure or above it, they gave them all a grant, and we were lucky enough to receive a grant for £10,000. Many received grants of more than that. That is now closed down. They've also provided grants for businesses that have had to close down through national lockdown or local lockdown. And only this month, they've introduced another £22 billion of businesses or business support through this grant initiative. But generally, this is fairly low value and it's sector specific. And I don't think it would apply to your sector. It applies to hospitality, for instance. So the main source of income for small and medium-sized businesses has been the Corona Job Retention Scheme, otherwise known as furlough. And obviously the motivation behind this is the government wanted to provide a source of income for businesses that would stop them having to make staff redundant, which for many businesses was the alternative. And this scheme was introduced in March 2020, and it's gone through various iterations. And the third iteration, which starts this month, COVID-3, if you like, runs on to 31st of March. So the government, initially had a short-term plan whereby they would provide funds for people who were furloughing staff. That then moved into coronavirus Job Retention Scheme 2, and now we're in Coronavirus Job Retention Scheme 3. Starts at the end of this month and runs through to March. Because of that, their much vaunted Coronavirus Job Support Scheme and the £1,000 job retention bonus have been deferred. And I guess they'll look at those again as and when coronavirus, as and when the furlough scheme is closed down. So just looking at the furlough scheme, I imagine many of you have taken advantage of this. If you haven't, you will know all about it. And if you haven't yet, you may still want to. As I say, it runs out on the 31st of March. Now we're in version 3. There are some significant changes to the first and second variances. And so if I just, rather than run through every element of what the furlough scheme means, if I just run through some of the changes, hopefully that will make a bit of sense. So now with version 3, the government are paying 80% of wages for time not worked by staff, up to a maximum of £2,500 a month. So this is what it started out in coronavirus 1, the first furlough scheme. The difference between the third and the first in that respect is that employers now have to pay employers' national insurance and pension contributions, which they didn't have to originally, but not quite as generous. Fairly significant changes are that for coronavirus 1 and 2, if you weren't on the payroll at March 2020, then you were not eligible for the scheme. But now from November onwards, the end of November onwards, people who've been employed since March, so new employees, now can go on the scheme. And that's a fairly significant change. Other changes are that have come in either in version 3 or version 2, are that you can have part-time furlough. So someone can work 2 days a week and be furloughed for 3 days a week, or any combination of that. That wasn't available first time. But some of the key factors still apply that I would just want to focus on. So if you have or are thinking of furloughing employees, that is a change of their employee's contract, either a written contract or an implied contract. You need to discuss it with the relevant employee, and they need to agree to the change in their contract, whether written or not. And that change needs to be evidenced in writing. So ideally by a letter from the employer to the employee, countersigned by both. So then it's a matter of record that that change in contract is agreed. And these things will become the importance of these things will become clear as I move on. Directors can be furloughed. There's a lot of doubt about that initially, but directors are employees, they can be furloughed. If a director is furloughed, then really the intention to furlough them should be minuted in a board meeting. The main thing about furlough, whether you're a director or an employee, is that you can't work in the business. So an employee or someone who's furloughed has effectively been laid off from the business. And I think most people in business know someone who knows someone where actually people have been employed, but furlough has been paid. So there's been an awful lot of fraud around this scheme, and HMRC are now picking up the mantle. In October, they were saying they were going to start 11,000 new fraud investigations. Some of those fairly serious. And so while a number of businesses, will boast that they've got away with it, potentially they did, but may not going forward. Now, the other thing about, so you may say, well, how are HMRC going to find out? Well, once they start investigating, they will find out. And lots of people are being targeted through whistleblowing. And just as a point of interest, if your accountant knows that something is going on that shouldn't be going on, whether wittingly or unwittingly, they have a duty to whistleblow, because receiving money for furlough, when the furlough scheme is not being applied correctly, is actually receiving money fraudulently, proceeds of crime. And all accountants and other professionals, once they know about it, have a duty to whistleblow. Now, we had one situation where we have a client that turns over about 4 million, 5 directors. The managing director was furloughed, and he called me one day and said he wanted some advice on a meeting with staff that they were about to make redundant. And I asked him who was in the meeting, and he said it was him and one of the other directors. And we then had a conversation about how he could possibly be in that meeting if he was furloughed and therefore not working. And after a few minutes, the penny dropped. And also when I said to him, you know, if you're making someone redundant and they realise that you're furloughed and you're in that meeting when you shouldn't be, all hell could break loose. So he was not deliberately trying to abuse the scheme, but he was unwittingly potentially abusing the scheme. And this happens a lot. Now, whether wittingly or not, you can see that I've said at the bottom that the fraud here is an estimated 3.5 billion. That's a very significant sum, and that won't be allowed to go unchecked. And so there is, I think, from October, as I say, 11,000 new cases being investigated. So I think if you're going to furlough people, you do need to be aware of the rules. Now, when you make a claim, you've obviously got to make the claim properly. These are fraudulent claims, as I say, wittingly or unwittingly. And how do you make a claim? Well, it's done through your payroll via an online portal. Now, if you use a payroll provider, which our clients do, or most of our clients do, that provider can make the claim on your behalf, provided you register them as your PAYE agent. And that takes a lot of the hassle out of it for you, and should also give you a level of protection. So, the message is furlough alive and kicking. It's a better than it was, but you do need to be very careful. And if in doubt, probably I would suggest you speak to your accountant and take advice. And moving on. And this isn't moving on for some reason. Okay, for some reason the slides are not, oh, here we go. I don't know what's happening here. Just gonna get Mark to try and get me back to the correct slide.
Which one was it? Okay.
So done with job retention scheme. It's there, easier business. Not that one.
Next one.
Keep going. No, next one. Okay, that's fine. Yeah. Sorry about that. So the second initiative from government was to recognise that you know, when businesses are struggling, you know, one port of call is to go to their banks or other lenders and say we need more money. That doesn't really work with banks. Banks are secured lenders, so they like to see security. They like to see an upward trend in profits, not a downward trend. And so they were very resistant to lending more money. And so the bank stepped in and got the banks to introduce the bounce back loan, coronavirus bounce back loans. And these have been a fantastic resource for owner managed businesses, and B, a source of fraud. And the reason they've been a source of fraud is because they were so easy to apply for. So the bounce back loan is one of 4 loans. There's a business startup loan, which is for new businesses. I think most of you have been established, so that probably doesn't apply. Bounce back loan, and then the one in the bottom left, coronavirus business interruption loan scheme, that would certainly be applicable to SMEs. And then the fourth one, the large business loan scheme, is probably not applicable to it, but it's not applicable to SMEs. So I will focus on the bounce back loan and the business interruption loan scheme as potential sources of income for businesses that are struggling. So across the 2 of them, the key thing for those 2 loans is that the government is actually putting money directly to the schemes. So paying the banks, all the bank setup fees, and the first year interest. Beyond that, they're providing the banks with guarantees in the event that in the event that they can't be repaid. So reducing the bank risk, which is exactly what banks were looking for, and that's made them more willing to lend money. And I've said 2.5% fixed rates, that's for the bounce back loan, but not for the business interruption loan. So just looking at those two in a bit more detail. So the bounce back loan, again, this was supposed to have stopped. It's extended now to January 21. So if you're a small business, and a small business is anything turning over, or broadly with less than a couple of 150 staff and turning over less than 45 million, this applies to the smaller end of that scale. You can borrow between 2,000 and 50,000 with a limit of 25% of your turnover. So if your turnover was 200,000, 25% is 50,000. If it's 300,000, 25% is 75,000, but you can only borrow 50,000, and so on. I've said in the note here, actually, if you a lot of people wanted to borrow some money, didn't want to borrow the full amount, you can now top it up to your maximum if the original loan was less than the full amount available. The basic is that these are for 6 years. Again, that's now been extended to 10 if you want to. 2.5% fixed interest after year one. First year is interest free. And the key here for lenders is that there are no personal guarantees. So the government is guaranteed to the bank that if you can't repay the loan, they will meet the shortfall for the bank. Now, for businesses in trouble, that's a massive incentive because it means the bank will lend, and the banks were told they had to lend. The way you get this loan, if you haven't got one, is very simple. In fact, it's too easy. You go onto your bank in the first instance, and it's an online claim. And it's just self-certification. There are no checks, or no significant checks. And we encourage a lot of our clients to apply for these loans. Basically, A, if they needed more working capital, and B, if they had other loans, for instance, a funding circle loan that they wanted to repay, those loans were costing them more money. This is cheap money with actually no risk to the business. So those are fantastic sources of income. They have been abused, and I've said down here, estimated 23 million fraud. That is an estimated figure of the amount of loans that will not be repaid. So loans applied for that probably the people who applied for them had no intention of repaying. Difficult to see how the government or the banks will pursue that money, but they promise they will. Now, secondly, the second loan scheme is for businesses with a turnover up to 45 million and up to 5 million loan of credit. So this could be a loan, it could be an overdraft, it could be asset finance. The first loan is purely a loan. And that sounds quite daunting. And you wonder how many businesses who are listening here, do turn over anything near 45 million. But in actual fact, the figures to date suggest that for the bounce back loan, £42 billion has been advanced at an average of £30,000. For the interruption loan scheme, which is on the face of it, a much bigger scheme, £19 billion has been advanced at an average of £244,000. So if you're a small business and you need money, and the bounce back loan is not sufficient, it is worth looking at sort of rolling that up into a business interruption loan scheme. Now, the security offered by the government isn't so generous. They will offer 80% security. As far as you're concerned, if you're a lender, if the loan is less than 250,000, you don't have to give any security. If the loan is more than 250,000, your liability, if you like, is up to 20% of any loan that's not repaid, your personal liability, and the government will pay 80% of the outstanding balance. But it is important to note that the personal guarantee, your liability, the guarantee you're giving doesn't include your house. So actually, this is a facility that is worth looking at, and I think could be a lifeline for many businesses. And it's particularly a lifeline because the government more or less ordered the banks to lend money under this scheme as well as under the bounce back loan. And so it has become far more freely available and far more accessible. So for either of those schemes, you know, we all have a bank. You can apply to your bank. If you don't succeed, you can apply to any of the other lenders who are listed on the British Business Bank website. And I can tell you that for the bounce back loan, there are 28 lenders. And for the business interruption loan scheme, there are 100 lenders. So 100 people who are willing to support you financially. So if you think these are of interest, talk to your accountant but go to the British Bank website, and they've actually got really good frequently asked questions, and you will find out all you need to know there. Okay, so for more accessible money, and just moving on, if I can, but I can't. I don't know why. I can't move down to the next website.
That's it, isn't it?
Yes. So, so the government did, you know, first of all provide direct financial support, and then provide what you might call indirect financial support, or making the access to much needed funds potentially more easy to obtain. They do provide other support and other initiatives, and I've listed a couple here. Now, importantly, you know, people are coming up to, well, first of all, paying their own self-assessment tax, and you were able to defer your business VAT, some of it until January. That's now been extended till March. And just on that, there is now an option to pay in 11 instalments, which is new. So if you deferred to January, actually you can extend that to March, and you don't have to pay it all in one go. As far as corporation tax and PAYE are concerned, there's no automatic deferral, but the HMRC do have a time to pay helpline, and you need to phone them. The client needs to phone them, not their agent, so we couldn't phone them on your behalf. And just explain the position to them and say, we'd like to negotiate. They generally will offer you repayment terms over 12 months. So, you know, they are much more accessible and amenable to negotiation than they've ever been. As I say, they've got a separate time to pay department and helpline. Other things, if you are investing in plant equipment or whatever, the extended tax relief on that went up from 250,000 to 1 million. That's been extended till January. And also another small point, the accounts filing deadlines have been extended to 12 months. I kind of think that's probably because Companies House are overwhelmed themselves. So finally, on this part of what's on offer from the government, there is the Kickstart scheme. This is relatively recent, and I think is something that you might all consider. So this scheme, the government will pay businesses to offer new jobs to 16 to 24-year-olds who are on universal credit. And they will pay, for 25 hours a week, they will pay 100% of the national minimum wage, and plus £1,500 per employee to cover setup and training costs. And the scheme, each initiative runs for 6 months. They must be new jobs, so you can't make someone redundant and then say we'll replace them with someone on the Kickstart scheme. And if you want to take on 1 or 2 people under this, probably most of you want to take on 30 in one go, then each local authority has its own gateway, Kickstart gateway. So if you look online at who they are, for instance, in this area, it's a Solent Apprenticeship Hub, and they will organise all this for you, but in return, they will take all or some of the £1,500 setup. So what you're really doing is giving people who are potentially unemployable, you're actually training them to be employable in the first instance. That's what the government wants you to do. But the incentive for you is it costs nothing, and at the end of it, you may have an employee that you want to keep on, who you've managed to give a lot of training to in the role that they might be in, and that's cost you absolutely nothing. So I think that is worth looking at for all businesses going forward. So that's what I think, that's a positive point. To finish on what will sound like a slightly negative point, obviously, you know, if business is tough, you're going to think of what your options are. Those options, that slide is not showing all of it. Those options are different if your business is solvent or insolvent. So if your business is solvent, broadly that means your balance sheet, you've got net assets. If it's insolvent, it means that you've got more liabilities than assets, and you can't pay your creditors, or you can't pay your debts as they fall due. So a key thing I would say here is that you need to be aware of your responsibilities. You are perfectly entitled to carry on trading if you are technically insolvent, provided you've got something to evidence that you've demonstrated that you've looked at this and believe you can carry on trading, and that is generally a sort of cash flow forecast or some sort of future business plan, which you would need anyway. So if you carry on trading, you know, you're protecting yourself as directors, because at the end of this, all directors have responsibilities to their creditors, and if the company does go bottoms up, then in any circumstances, the actions of creditors are looked at. If you're solvent, your options are a member's voluntary liquidation, or if you've got less funds, less than 25,000 reserves, a voluntary strike-off, which is a really quick and simple process. Costs about £8 now. And the advantage of both those processes is that any money you get out of it is capital. Every individual, so we're talking about shareholders here. If you're a shareholder, every individual has an annual capital gains tax exemption, and any money you get out of any company will benefit from being reduced by that capital gains tax exemption. So potentially tax-free, depending on the numbers. And that is it. So if you've got any queries, please do ask. If you think about it and you've got queries that you want to deal with later on, I would suggest you refer them to Mark, and he'll deal with them or pass them on to me. So thank you. I don't know if I've overrun.
No, that's fine. Thank you, David. I thought that was really interesting. There are a lot of things for businesses to think about at the moment, and do reach out for support. In these challenging times, you know, you cannot be, you as a director or as a senior manager with perhaps director's responsibilities within a business, reaching out for help and asking for advice is the best thing you can do. Running a business is a lonely, lonely place. And sometimes when you reach out to people who are like David, who's got a lot of experience as an accountant, you know, they can help you navigate your way through difficult times. So thank you very much for that. That was grand.
Thank you.
The other thing, obviously, to think about is you know, we've all got tax returns to submit and things like that, and it's the deadline for our individual self-assessment tax returns is the end of January. So those are things to be thought about as well. So as we're not going to be having a jolly Christmas, what are we going to, as Boris said last night, we're going to have a jolly careful Christmas. If you need any, do some reading. So thank you for that, David. Okay. That's grand. Our next presentation, our next session this afternoon, we're brought to you by Forrest Brown. They are the UK's largest R&D tax credit consultancy. R&D tax credits are a very generous source of funding for businesses in our sector. And many companies within our sector, or within the environmental services sector, use R&D tax credits quite a lot. So I've been looking forward to welcoming them to speak to you today. My experience is they're relative, you need advice. You need to go through someone to help you to apply and to make sure that what you are claiming for is eligible. And if it is, The good thing about getting external advice is they will maximise the benefit to you. So some of our members will be familiar, but I suspect many of you may still be overlooking this opportunity. We know legislation around emissions, pollution, water quality is constantly evolving. And as a sector, we need to diversify to meet these requirements. But it is in this work that R&D, innovation, can be found. Now, as a business owner, I've at first hand seen the impact R&C tax credits can have on a business. And for those of you who are yet to explore this funding, I urge you to consider it. I'll now hand over to Lorelei from Forrest Brown to explain more. Lorelei, over to you, and I'll just, you need to share your screen and hopefully you're enabled to do that.
Hello. Thank you.
Hi, Lorelei.
I will just share my screen now. If you bear with me.
Great, thank you.
Very, very red. It says at the moment that it's disabled me from screen sharing. So just
try now. Try now.
Let's give it another go. Oh, here we go. Lovely.
Sorry, it was me. That was me.
Okay, perfect. Guys, bear with me and let me know when you can see the slides. Can you see them?
Not yet.
Okie dokie. Bear with me. There we go.
It's
How about
coming.
now?
It's just about to come. Yeah, there we go. You just need to go, yeah, full screen. That's it. Lovely. We're on.
Perfect. Brilliant. Thank you so much, Mark. Thank you. Hi, everyone. Thanks very much for sitting and listening to us talk today about R&D tax credits. For any of you who haven't heard of Forrest Brown before, we work with businesses across the incident response sector, helping them to access funding from the government's R&D tax incentives. From speaking to our clients in this area, it's rarely a straightforward job in this sector. Yet many will be overcoming challenges on a daily basis, and it's this type of activity that we see very often qualifying for R&D tax credits. So in today's session, we are going to be shining a light on this lucrative funding source and explaining how businesses in the audience can access it. Before we begin, I would like to introduce my fellow speaker for today, Adam Kotas. There we both are, both in sunnier times. That was a while ago. Adam is a director at Forrest Brown, and he's also a chartered tax advisor. Adam's got over a decade of experience, and over the course of the years, he's helped hundreds of businesses, both large and small as well, access R&D tax incentives. So well primed on the topic.
Hi everyone, thanks Lorelei, very generous introduction.
Okay, great. Well, let's crack on then. So if we begin with part one, how to access R&D tax credits quickly and accurately. So I think, Adam, probably the best place to start is right at the beginning with the most important question of all: what are R&D tax credits?
Yeah, great place to start. People often think this is quite a new incentive, but it's been around for nearly 20 years now, introduced by the government all the way back in 2000, really to reward companies in the UK for innovative work. But probably a bit more than that, I think, because it's really a business incentive. It's designed to support companies to provide some cash into the business to help them develop. And it's times like this, I think, that the true value of this incentive can really be felt. Now, the slide on the screen in front of us recognises that R&D credits are not just good for businesses themselves, they're also good for the economy as well. HMRC says that for every £1 that they award to a company through R&D credits, up to £2.35 is stimulated in extra R&D expenditure.
Great, thanks, Adam. So if we look at the next slide now, every year HMRC release statistics into the uptake of R&D tax credits across the UK. The most recent stats show that less than 10% of waste management SMEs made an R&D claim last year. This represents a whole host of businesses working within environmental services and incident response too. And that seems really low to us considering the innovation that we're seeing coming out of this sector. So Adam, why do you think it is that so many companies are still missing out on R&D funding?
Yeah, you can imagine that HMRC statistics aren't always drilling down into the very niche parts of industry, but I think there's a number of reasons, but the definition of R&D credits really deters companies from actually making a claim. So the official definition talks about R&D taking place when a project seeks to achieve an advance in science or technology through the resolution of scientific or technological uncertainty. It's a bit of a mouthful, but it's also quite broad. It is intentionally broad, but it doesn't help companies understand when they're doing practical problem solving and how they might be able to qualify for credit. So we try and break that down a bit more. Companies have to have an understanding of how they might qualify before someone will take the time while they're busy to think about having a conversation to identify what any potential value might be. So think about types of projects you're doing. Then let's think about where you're carrying out technical activities. That's the problem solving part, perhaps, of the projects that you're doing. And then let's think about where does this go beyond what sort of current baseline capability is in this area. And there's lots and lots of examples that we come across to see where this takes place.
Fantastic, thank you.
Now, I think if we just look at this opportunities for innovation here, think about common triggers for problem solving work. So, regulatory challenges provide a huge area of activity for R&D credits, doing things in a greener way, looking at making things faster, safer, cheaper. These are all challenges which lead to the technical challenges within the projects. So if you've tried to make a process faster, for example, to minimize disruption caused by a chemical spill, or you've tried to make a process more environmentally friendly in how you go about it, that's the sort of work that might trigger R&D activity and would certainly be worth a discussion.
Fantastic, thanks Adam. So we know from our experience that R&D can be spotted throughout the sector in so many different places, but for business owners, identifying their own R&D is not always that easy. Adam, could you explain a few areas in this sector where we often see R&D among our clients?
Yeah, of course. These aren't exhaustive by any means, but there's a few areas up on screen. We've had, for example, clients who have developed novel techniques for repairing damaged infrastructure. We've had clients who have developed new ways to remediate contaminated land when faced with particularly challenging environmental conditions. These types of things are bespoke challenges. We see this all the time in this sector. Things are quite unique to sites or environments that are being worked in, or projects themselves. And so each challenge will often require a fairly bespoke, unique solution.
Fantastic, thanks Adam. So aside then from the absolute mouthful that is the R&D definition, there are also lots of misconceptions that exist in this sector that are putting businesses off from claiming R&D tax credits. And I'd say probably the most frequent one that we hear in this sector is myth number one: I'm just doing my normal job, that isn't R&D.
Yeah, think back to that definition of what R&D credits really are. And it's often because you're skilled in your area of work that you tend to look at and overcome challenges as part of what you do. Now, in truth, each project often has unique, complex challenges which will require some form of tailored technical solution to overcome them. But how do you understand and identify where those triggers are for saying, right, hang on, there's potentially a government incentive to support this work? And that's where breaking it down to see where those challenges are. Is it faster, safer, greener, cheaper, can really make a big difference.
Great, thank you. So let's take another myth then. Another one that we probably hear quite often is myth number 6. Adam, why do you reckon we hear this so much?
Yeah, sorry, this is pretty common. I think in reality, very few projects align completely with the project brief. So we hear lots of comments from people saying, we specifically can't do that. We're not, that's not part of our scope of work. And yet when they get onto site, there's often things that they have to do to deliver the project, which often involve technical activities, things that hadn't necessarily been identified from the outset. And that often falls to the contractor managing the project on site to overcome that. So again, this is problem solving, this is technical challenge. There may well be R&D involved in finding a solution.
Great. Okay, then. So now we've explored what R&D tax credits are and how they work. Why don't we take a look at how businesses can access them? Adam, could you talk us through the time frame for R&D funding?
Yeah, we've got a typical time frame on screen, but before I just delve into that, I'd probably begin this by saying we would recommend that you do have some specialist support. Seek the help of a specialist to help with the R&D credits claim. This can be quite a complex, nuanced area of tax, and right at the moment, people will, understand how important time is to manage lots of different activities within the business. We've heard about all the various government initiatives to support businesses that are in place at the moment. How do you access those? How do you have an understanding of those? So the R&D credits, similarly has some complexities to it. You need to make sure you're claiming the correct amount, and you need to make sure your business is protected from risk. Two really important things at the moment. Partnering with a specialist helps you to focus on managing your business and ensure those two areas are taken care of. The timeline on the screen, it gives a pretty typical timeline for claiming R&D credits, usually between 4 to 6 weeks to prepare an R&D claim, to really understand the financial and technical aspects of the business and prepare the documentation for HMRC. HMRC, we've seen taking 4 to 6 weeks to review R&D claims and make any repayments to companies. But I think at the moment, cash is so important. Certainly a lot of our clients are asking us to accelerate that process of claim preparation. I mean, if you think about, if you can accelerate that process, make sure people are available to do that to as little as 2 weeks, and then HMRC make a repayment within 4 weeks, you've got a cash injection into the business in as little as 6 weeks. That can be really effective for companies. And I think it's also important right now to think about what the deadlines are for claiming as well, because if you haven't made an R&D claim before, you can look back at the 2 previous accounting years to make an R&D claim. So, we've lots of companies who have a financial year end of December. For those who aren't currently claiming, you've got just over a month to look back and say, okay, if we had costs in the 2018 year that may be relevant for R&D credits, we've only got a month left before we lose the ability to make a claim for that period.
Fantastic. So that's kind of the time frame that businesses should expect from claiming. But what involvement would the company actually have to take themselves if they began claiming R&D tax credits?
Yeah, well, this does vary according to the support that you have, but generally the commitment shouldn't be more than around 8 hours, and that's 8 hours spread across the business. So that's a few hours spent with the technical team, understanding the projects, understanding the activities, really delving into them, and then a couple of hours as well with the finance team, making sure that everything's clear on where costs are and how they relate to activities. Now, we try and make this as simple as possible. We always match our clients with a team that includes tax advisors and industry specialists as well. So people who used to work in the industry. And the value of doing this, I think, is you match up the right specialist. It saves time. It builds some efficiencies. And what you really, really, really don't want to be doing is to be left to do a lot of that work yourself. So that's where the time can suddenly impact the business. And we've seen this a lot where people are left to do a lot of technical preparation, for example, themselves. Now, if you're doing that, you need to figure out, what support are you really having from your advisor? I would certainly say, it's been a really, really strange year, 2020. There's never been a more important time to focus on the business. So if you're spending time on something like the R&D claim where perhaps you need more support on that, then do make sure that your time commitment is in line with your expectations.
Fantastic. So if we move then into the next part of the webinar, which is the exciting bit, how much R&D tax credits can be worth to businesses. So hopefully now we've reassured you that it's definitely worth exploring this incentive. So if we take a look then, Adam, how much could it be worth to businesses in the audience?
Yeah, so for SMEs in the audience, and that's companies who have less than 500 full-time staff. So that does cover quite a lot of companies in the UK. This is a really valuable incentive. It's very generous. Companies can recoup up to a third of costs that qualify. So costs are generally people costs, software costs, some material costs. They tend to be the costs that make up the bulk of the claim. And if you look at a company that's spending just say £250,000 a year that qualifies for R&D, that company could be recouping over £80,000 in R&D credits. Now, this is a really established method of funding for ongoing R&D. You can claim this each year. And so that's an injection of cash into the business that you can look at starting to build in and forecast as something, if the projects qualify, that may be coming back into the business each year.
Okay, fantastic. So we've got a couple of case studies now from some of our clients in this area that demonstrate just how valuable the incentive can be. Adam, could you talk us through this one here from a geotechnical specialist?
Yeah, of course. This is a good example. They were asked to remediate the site of a former power station for development into a residential complex. So considerable challenges with the ground and with the environment and the waste within the soil. But of course, the client wanted to reuse and repurpose as much as possible. So this isn't an unusual thing for us to come across, but again, it's quite site specific. You know, there's a series of analysis of groundwork investigations and tests that go through to identify how to best recycle and reuse that contaminated land. Now, the project created a huge benefit for the company. You can see on screen over 260,000, and that was just for 1 year of making the R&D claim. There's some really technical activity involved. The time limit, remember, to make an R&D claim is 2 years from the end of the accounting period. So if your business is new to claiming, you could potentially double that amount.
Okay, fantastic. So we've got another example here now. This one is from a water treatment specialist. Adam, could you talk us through this example?
Yeah, thanks. Another good example of making an R&D claim, but making a process quicker. So this is often hidden. So improving that process side of things can be really important for companies because it can ultimately impact, how efficient the business is, how productive, and that's the aim of the R&D incentive, is to increase productivity. So this company were asked to install a new system for filtering wastewater, and again, trying to do something quicker. The time window for carrying out the project was extremely narrow. So to try and achieve this, the company designed, experimented with different prototypes and models to gauge an idea of how the installation could take place as it got to site. And you can see this is a company with a 9 million turnover, able to recoup over £150,000 through the R&D incentive.
Fantastic. Thanks, Adam. Okay, so we're moving on now then to the final part of the webinar, which is most important if a business is already claiming R&D tax credits. But the reason we put this in when we talk about this is that this area of tax legislation can be quite complex and it can really be easy to get something wrong. So it's important that you claim correctly. Over the last couple of years, we've come across lots of businesses that have come a little bit unstuck with HMRC as a result of preparing their claim incorrectly. Adam, why do you think this is?
Well, unfortunately, Lorelei, the benefit to companies, the sometimes lucrative nature of R&D tax credits has drawn what I think is a multitude of advisors who really overpromise on what's available through the R&D credit system and then under-deliver if there are challenges around what really constitutes R&D within the guidelines. So we know from sitting on the consultative committee with HMRC that they have seen an increase in poorly prepared R&D claims. And of course, even claims that shouldn't have been made at all. We heard earlier on about fraud within the system for claiming loans to support companies. And certainly there are claims for companies on the R&D credits that should not have been made. Now, as a result of this, HMRC has really cracked down on poor quality claims. They've shifted the focus away from raising awareness and saying to companies, why are you not making claims? This incentive is there for you, to saying these claims have to be made properly. And here's our interpretation, which even, you know, with HMRC, even though the credit's been around for a while and the legislation is quite consistent, HMRC are adapting their approach and interpretation. Now, with this renewed focus, we're certainly expecting to see a rise in HMRC asking more questions, more inquiries. So it's really, really important that whether you're claiming yourself or with your accountant or another advisor, that you're doing that correctly. Your claim has to be supportable. And I think the good news is that to protect businesses from falling foul of HMRC, Forrest Brown has really been lobbying for there to be minimum standards that apply for all advisors. Now, this is a completely normal thing for accountants and tax advisors to have minimum standards that need to be adhered to, codes of conduct. This is something we're very passionate about. Our technical director, Jenny Tragner, helped to write the recently released guidance in relation to professional conduct for R&D claims and for advisors who are making R&D claims for their clients. Our aim is really simple, to improve standards in the market and ensure that all companies receive access to accurate and reliable tax advice. So really, really important, but I think this is an ongoing process. This is just the first step. Reputable advisors will have relevant professional memberships. We see this across industry. We see this across a range of accounting and tax areas. You know, as a result, where they have those professional memberships, they must adhere to the PCRT guidance. But of course, you know, anyone can provide R&D claim services where they aren't officially regulated, and that's where the real challenge is for the industry.
Thanks, Adam. So essentially finding the right advisor then is essential. So what can businesses do to make sure they're seeking the help of a reputable advisor?
Well, I'd start off by saying be vigilant. We've seen some pretty bad practices out there and lots of potential advisors. So the question is, how do you separate someone who's going to provide you an honest, reliable service from something that's not going to work so well? I generally just say you need to ask a few questions, and they're quite simple ones. We've got a very simple sheet on the screen. You know, is your advisor regulated? We're regulated by the Chartered Institute of Taxation in the UK, the CIOT, and as a result, we're bound by their code of conduct. So, you know, you don't have to, though, be regulated to offer this advice, which means anyone could provide it. You know, again, reputable advisors will have relevant professional memberships and strict guidelines and standards that need to be adhered to. Next, I think sector-specific expertise becomes really important, particularly as R&D activities and claims become either more nuanced or more complex. R&D advisors will be experts in tax. You know, they'll have a lot of clients, a wide range of sectors. So it's important to have a dedicated team of sector specialists from the industry who can grasp the challenges that you're facing and the areas that you're doing R&D. So again, it's a combination. So tax expertise, sector knowledge, that makes sure that all the R&D is really uncovered and that everything's protected from risk. So we have a large team of sector specialists who have had a career in industry. I would tend to say if you're claiming with your accountants, it's possible that they generally won't have specialists from your industry. And that's where we partner with hundreds of accountants to ensure that they have access to our sector expertise to make sure that they're uncovering all of their clients' R&D, and that's a really effective way of providing a complementary service. You should also just be asking, with what we expect to be a rise in questions from HMRC, whether your advisor will defend a claim that's been prepared should HMRC open an inquiry. And is this included as part of the fee? At the end of the day, it's a company director who signs off the claim. It's part of the tax return. So although you may not have prepared it, and certainly in some cases that we've seen, you may not even have seen that much of it, you will be held accountable if HMRC come back asking additional questions. So just be aware, HMRC does have the power to challenge R&D claims if necessary. They can investigate previous claims that are still open and within the time limit if they do want to ask additional questions in relation to those claims. So that support in the event of an inquiry should be included, or it should be very explicit when you're paying for the service that it isn't included. So again, just be aware of that differentiation. We certainly heard of an interesting case from a company where the advisor had submitted their R&D claim just using the accounts and the website, and didn't share the documentation with the client before filing it. And the claim was simply withdrawn when HMRC asked some questions. So very important to see this information before you sign off on it. So finally, and just before Lorelei has any final comments, I think just making sure that your advice, the advice that you're receiving, is tailored to your business needs. You know, no two businesses are the same. The level of R&D support that one company needs to claim might not be right for someone else. If you have made several claims with an advisor and you are now comfortable preparing some elements of your claim in-house, then complete claim preparation support wouldn't necessarily be right for you. So again, you might just need a bespoke consultancy offering, for example, to review an existing claim or to make sure you're keeping the right records and ensuring support for your R&D claim as you go along. So again, if you're facing quite a specific challenge or looking for some specialist tax support on a consultancy basis, please do get in touch.
Fantastic, thanks Adam. I suppose last thing from me before I hand over to you and we hand back to Mark is just to see if there are any questions from the audience about anything that we've chatted about in the last half an hour.
Yeah, Lorelei, can I ask a question?
Of course you can, Mark.
Do you have to be making a profit to make an R&D tax claim?
Adam, that's for you, I think.
Yeah, thanks, Mark. No, you don't have to be making a profit. I think the really interesting thing is, you know, the intention from the government was especially to support businesses at an early stage with this incentive, or at a time where they may be spending more to effectively take a risk and therefore maybe in a loss-making position. If the business is loss-making for a particular year, it's possible to simply receive a cash payment from the government as part of the R&D scheme. So no requirement to be making a profit.
Great, that's quite reassuring. Does anybody else have any other questions?
I reckon that's a no. Before we hand back to you then, Mark, to round the session up and over to the next, is there another speaker?
Yes, there is.
There is, okay, we'll be quick. Adam, do you have any final comments for the audience?
Well, just to say that, you know, if you're not claiming R&D credits, you know, we've seen companies now taking another look at cash generative opportunities for the business. And Mark just mentioned, you know, if for example, a year is not profit making, then there's still the opportunity to look at this. I would say it's definitely worth exploring whether your projects could qualify. My details are there on screen. Please do give me a call if you'd like to have a conversation. We do understand that you're going to be heavily focused on what the company is doing at the moment and how how it's operating. But R&D credits are a sort of debt-free source of funding. They can play an important part in that business operation. So please do get in touch if you'd like to know more.
Fantastic. Well, thank you, Mark. Thanks so much for having us.
No, well, that's a pleasure. Thank you very much, Lorelei. Thank you very much, Adam. While you're unsharing the screen, oh, that's good. I like that. Nothing like a good reference. That's good. But I'd like to add a couple of points to that. My experience of running my own business was we were extremely slow to take advantage of R&D tax credits. And in fact, we were very poorly advised by one of our financial directors who said, oh, you can't claim R&D tax credits because you're not making a profit. And that was completely and utterly wrong. And it was going to a presentation like this that made me realize the opportunity that we're missing. And all of us in this industry tend to have to innovate to implement new products, change the way we deliver products, innovate in the way we do things more safely. And that time that you spend innovating is probably, and you need to get advice on this, but from somebody like Forrest Brown, but that is probably likely to be applicable, or it will be, you can make an R&D tax credit claim for that innovation and that work that you put in. And it is really important, particularly at the time when businesses are under stress, that they look at what they have had to do over the last year or the last 2 years, if they haven't claimed before, where they have innovated, and they need to sit down with their advisor, go through all that they've done, find out what the allowable costs are, and reap the benefit that a claim like this can make to your businesses and to your cash flow. And it's not a complicated process. It may seem it, but it's not as complicated as it seems from the outside. But I would urge you to use an advisor, because ultimately, as directors of businesses or serious senior managers within businesses, you know, there are things you can get wrong, and poor advice can cause you problems later. So, you know, I would say, you know, in hindsight, we could have claimed more than we did, but just make sure you get advice. But I think it's something that you should certainly do. Okay, so thank you very much indeed to Forrest Brown. I thought that was very useful. Now remember, all of this presentation will be going up on the website, or there'll be a link to it on the website tomorrow. So our last presentation today is by Terry Enger, who represents the Department of International Trade. I was introduced to Terry by Vicoma, an Isle of Wight-based member that has been manufacturing marine spill products for 50 years. And I can assure you, Terry hasn't been advising the whole time, but the majority of their business is overseas. They're a really good example of the gains to be made by close contact with Department for International Trade. And they have benefited by using grants to aid access to new markets, to help attend exhibitions, and really to have somebody who can help hold their hand as they explore new markets or explore new products suitable for new markets. And I would say that Terry's experience of helping engineering companies develop products and take them abroad is invaluable. And using the expertise which exists within DIT is really, really useful. And I've used it myself in other innovation businesses before I joined this industry. So Terry is now our DIT contact, and he's kindly agreed to field inquiries from people, from businesses, streamed through me, and I can then put the business in touch with Terry, so that if you are thinking of exporting, then Terry is your man. So I'm now going to go and share his presentation, and I'm going to, where is it? Oh, I've got to find it now. Where's it gone? Okay, Terry, the floor is yours.
Okay, I haven't seen the slides come up yet, so
It is. It should be up on the. Is it up on the screen now? Can you see
Not
it now?
yet. No, not yet. I can't see them yet.
Okay. Let me try again. Right. Can you see them now?
Now I can. Yes, that's it.
That's great. Okay. So, Terry, you just tell me when you want me to press the next one.
I will do. First, I want to say thank you very much, Mark, for inviting me to speak to you and your association and your members. And secondly, to thank the two speakers from Paul Mead and Forrest Brown, who have really sort of put the bar extremely high. And as Tail End Charlie on the presentations, I can assure you that I might be last, but I will be least after that. Before we move on, I'll just give you a bit of an idea. The Department for International Trade has got a bit of a legacy. It was set up by Theresa May as a department with its own minister. But prior to that, the work was carried out by an organisation, an agency called UKTI. And UKTI was attached to a variety of departments over the years. So it started off in the Department for Trade, DTI. It moved to another department, which was Business and Skills. And then when Theresa May set up the Department for International Trade, the work became part of that. So we got integrated into a department. It was always set up with the view, the work that we do, which is advising companies to export, it was always set up with the view that we are offering something that the civil service wasn't offering. So the advisors, and I'm one of them, were recruited from industry. I'm not a civil servant. I've never been a civil servant. I'm a grubby engineer. And so hopefully I can relate to sort of the oil spill market. Can I have the next slide, please?
Doesn't seem to want to move. Hang on, I'll just work this out. There we are.
There we are. So the Department for International Trade is responsible for promoting British trade across the world. We have got, there are slides which will tell you exactly what it's composed of, but basically we're honest brokers. We try to sort of to encourage exporting. We try to encourage more companies to export, and we try to make that journey that companies make as painless as possible. If we didn't exist, British companies would still export. British companies have got lots and lots of powerful skills and ability, and our products are very exportable. So we would export without the Department for International Trade. But what we bring to the table is shortening the learning curve, using previous examples of how to do things to the best advantage of the companies, so that we can help you as honest brokers to get as painless as a process of exporting as possible. Can I have the next slide, please? The services we offer, this is in a good year. This is anything but being a good year. We try to, sort of, as I say, shorten the learning curve. We try to understand what companies do. We try to link them up with markets that need what they do. We open doors in those markets to the right buyers, decision makers, support. So we network, that's principally what we do. Because we're the government, we raise the profile of companies exporting. We do this by attending sort of at government to government activities. We attend at trade shows. We lobby where necessary within industry associations and so forth. So we raise the profile of British exporters. We have people on the ground in overseas countries. So we've got, we're usually embedded either in the embassies or the consuls or the high commissions. So let me make some distinctions here. Most countries, we only have one embassy. There are some exceptions. And very often the embassy is not the place that you necessarily want to be. So if you think about it, the embassy in Canada is in Ottawa. The embassy in Australia is in Canberra. Most companies trying to export aren't thinking of those as their significant destination. So we tend to have the DIT people, the Department for International Trade people, in the most commercially sensible places. So for example, we focus in America. We have two embassies in America, in the USA. We have the diplomatic embassy, which is embedded in Washington, DC. But we also have an embassy in New York, which is there for the United Nations. And as New York is the center of commerce in America, that's where DIT is headquartered. But in America, we have another 6 or 7, I can never get up to date with these, another 6 or 7 consuls dotted around the country. So in places like Houston in Texas and Miami in Florida and San Francisco, I think it is in California and so on, and Phoenix in Colorado and that. So Chicago, so on. So we have a presence spread across America. We do the same in China, we do the same in Russia, we do the same in Germany and France. And so these countries have multiple centers where DIT are located so that we can get closer to industry and closer to where you guys want to be involved. We improve communication, we get our message across to decision makers. We also do market research, we know what's going on. Our local guys attend, as I say, briefings from ministries in the country. They go to the trade fairs and so forth. So we get a lot of local knowledge which we can use to help you to export. Next slide, please. This goes on forever. Why should companies export? There is an argument which says that exporting is such a good thing to do, companies will do it regardless of what anyone else says. The problem is that if you're a small company, there's no history. There's no one somewhere else in the organization you can turn to and say, what happens if I do this? And so there's a certain fear about exporting, especially in the smaller companies, in the startup companies, that the exporting is such a difficult job that it creates more problems for a company than it solves, and that the effort isn't worth the benefit. So we have to be, we created the DIT, we created its predecessor, UKTI, goes all the way back to Michael Heseltine. We created it because there were a lot of companies in the UK, very successful companies, that could export but didn't. They didn't bring their products to an overseas market, and there are sort of reasons why they didn't do that. It made sense to the company, but there is a loss to the country because we're not exporting. So exporting is the extra profit, it's the extra margin that the country makes on its existing infrastructure, its existing production. It can be the most profitable part of your business. It can be the most easy part of your business. It could be the very simple margins that sustain you through a local downturn in the UK market. So there's a whole range of reasons why exporting is a very, very good thing. But we recognize that companies are scared about exporting, and we're designed to hold your hand as honest brokers We try to do that at the lowest possible cost to you, the lowest possible risk to you, and underlying this all, it's to make companies more profitable and more successful. It's to make companies' products better, and I'll explain a bit about that later. And it's to retain jobs or grow jobs, which is what everyone wants. Next slide, please. This is a bit more second tier of benefits. The export market owes us no favors. If you are exporting to Brazil, it's a long way away. It's the company sort of looks at your products, they're fit for purpose. But if anything goes wrong, they're very quick to drop you. It costs you a lot of money to get out to sort out problems. So you're only as good in an export market as your last sale. If you're exporting to Bristol and something goes wrong, you can get in your car, you can get your customer services people, your engineers, you can sort the problem out easily. You can patch up any sort of relationship difficulties that may have arisen. And so you can sustain the business relatively easy. So to hold an export market, to enter an export market, you need to be good. They have the whole world to choose from. They choose you at the moment because you have got the right product at the right price and the right quality, but they will drop you quickly if that fails. So companies that export have to keep their game going. The other thing I would say is that if you are exporting, you have the 7 billion consumers of the world challenging your product and demanding sort of that you solve this problem or that problem. If you don't export, you're relying on that innovation, that pressure to develop coming from a much smaller number of consumers. We find, and this is absolutely true, that companies that export, because they tend to have better products, because they tend to have more challenging problems to solve, because they have a bit more excitement in their life, they actually find that their staff retention rates go up, turnover drops. People like exporting. They like the opportunity occasionally of going out and solving a problem in a far off land. I used to sort of, in my background, I've been all over the world. There was nothing that challenges your personal development more than knowing that you're in the wrong time zone to get any support from your local office. You're on your own. You solve the problem, and then you go back and get the approval. It develops robust personal skills that are then available within the company. So there are lots of hidden benefits of exporting, which are not so obvious. Next slide, please. Ease of doing business. This changes with the seasons, really, but it's not a surprise. Countries that are rated as the easiest countries to do business in: New Zealand, Singapore, Denmark. This is not North Korea, the South Korean Republic, Hong Kong, well, maybe not. United States, maybe not. Norway, Georgia, Sweden. So we're in the middle of that group of the best places to do business in. That means that companies overseas want to work with us. They want to export to us. They also want to buy from us. So this is well known. It is well known that these countries are friendly countries. Next slide, please. It can be. For someone who's been stranded in many, many places and sort of and had considerable difficulties to overcome, it can be. Is it risky? Can you get into trouble? Yes, you can. That's why a group, an organisation like the Department for International Trade is there to help you. I've been to loads of places, and when I talk to my companies I support, I talk from experience. I've been out in Japan, I've been out in Singapore, I've been out in sort of in New York or wherever. So I talk to my companies about my experiences, what I understand of how they do business in those countries, what I understand about some of the cultural aspects in the Middle East, for example. I've been to the Gulf and some of the issues there. Some of the technical problems that you might be confronted if you happen to go out to Russia. I've been out in Russia. If you come to us for help, you're talking to people that have walked the walk a bit. I'm a technical guy. My background is a scientist. I've got several degrees. I'm a chartered engineer. I went to Imperial College and so forth. So I'm a technical guy. I'm a very hands-on sort of problem-solving sort of person. And so so one of the things that I get, which I like, is the companies that I tend to work with are the ones that have got technical products and technical sort of processes that need to be understood. And I relate very much to those sorts of companies. But my colleagues, there's about 30 colleagues in the Southeast, come from a wide range of businesses. Some of them have come from banking, some of them have been in transport, some of them have been in software development. So there's a real mix of expertise. We're all senior management, so we've all been directors, we've all worked in a variety of different companies, some very large like me. I worked for British Gas, some medium size. I've set up my own company in the past, so small as well. So we have a variety of skills that we bring to bear that we can help you. One of the big challenges, especially if you're new to exporting, is where do I go? So I usually say that you can divide the world export market into 4 boxes. There are small markets that are fairly friendly and easy, and I would suggest that that's the Republic of Ireland, maybe some of the Nordics. There are medium-sized countries that are fairly easy, and you could say that some of the other countries in Europe, are fit into that category, or maybe Canada, or maybe some of the Commonwealth countries. Then there are large countries where the export market is really attractive, but they are difficult. And I would say that would be countries like America, United States. It could be countries like China. It could be countries like India, where the market could be huge, but you could spend a lot of effort to get some of that market. And then the last category is countries that are very, very difficult, but are small. And I usually sort of give as an example, North Korea. This could be a country that could cost you your life if you go and try to export into it. You may never get out again. There's all manner of problems. And so we tend to focus on the small but easy, and the medium to large but easy, as a sort of where you gain your experience, and then you should be capable of taking on the large but difficults. And the large but difficults would be the US, Russia, India, China, Brazil, where sort of you need a good amount of skill set, a lot of patience, and not a small measure of luck. We can help at any stage in this progress. Next slide, please. Exporting companies that I can add to this list. They have all the excellences. So because exporting, you choose where you go. Your export markets can be your most profitable sales. I've mentioned that exporting sort of can be very much more productive and innovative than companies that don't export. Because you're in more than one market, you don't need to be in too many more markets, but because you're in more than one market, you have a certain resilience to downturns. I mean, the COVID, if you like, has been an absolute sort of stress test for the United Kingdom. The whole world has shut down, and some markets have come through this COVID process faster and more resilient than others. So the shining examples of this have been in the Far East, where countries like South Korea, for example, have managed to sort of shake off COVID and are flourishing. China, to some extent, although they took an initial hit, have come through and their productivity has grown. Australia and New Zealand are legendary about how they stamped on coronavirus. So it's been an absolute stress test. And so at this stage, when we're offering companies advice, you might think about sort of, well, now that when we come out of this lockdown, where do I go? Well, the Far East might be the place to go, even though it's at the other side of the world, and it's not the easiest of markets in every case. Of course, for your own sake, if you gain a success in a foreign country, then you put out your press release, you shout it from the rooftops. It makes your company much more credible. It makes you more capable of surviving the shocks that come our way. Next slide, please. DIT. So we are helping. We try to get into your strategy. So we try to sort of think what you do, what makes you good, and then where would it be suitable for you to go. So we're trying to identify the right markets at the right time. Now, the right market may be some way away from where you can go. We try to sort of do it in sustainable portions, so that you develop and build your capability. We help that in key ways. So we help, and I'll talk about this in another slide, but we help open doors. We help by getting you to the right place. We try to make business happen. We've got access. There's been discussion earlier about finance. We've got a part of our DIT team is the UK Export Finance. So we look at export guarantees to help you make sure that you don't lose money on your exporting. We have ways of helping you fulfill orders, for example. So if you need cash flow to sort of to build stock for a sale, there are ways we can help. Our advice is free. Some of the services we offer aren't, I have to say, but the advice is free. What I usually say is that my time is free. You will never pay for my time. I also usually sort of put a caveat in that, and that say that I'm such a grumpy sort of old soul, really, that I usually tell you quite bluntly if I think you're wasting my time. My advice is impartial. I've got I get no financial incentives from helping you. I can keep a secret if you tell me stuff in confidence. I'm not allowed to sign an NDA, a non-disclosure agreement, but I am well aware of the commercial sort of process and how keeping sort of confidential information sort of locked up is appropriate when you're in a delicate negotiation. So I would say I try very much to sort of be part of your team to advise and help at the right time. Next slide, please. We have this changes all the time. We've got the key thing is we've got 1,200 staff. It's probably growing a little bit in over 100 overseas markets. We call markets countries, basically. Overseas markets are countries. So we have a good presence. You can imagine that our biggest overseas presence is in the United States, which is our biggest single export country. Where we do very well. We punch above our weight in the United States. We sell them more than they sell us, which usually catches people by surprise. It is a very, very tough market, and it's full of top quality British companies that have taken the wrong strategic decisions in America and have foundered. On the other hand, there are lots of small companies that have put their product into the American market and have been absolutely astounded at how lucrative the enterprise has been. And I can mention, and I can give lots of examples of where that's happened. So one of the big selling points for DIT is we got people on the ground. They divide up into overseas expats, our civil service servants. We interchange with the Foreign Office on a regular basis. So we have got some of our people overseas are ambassadors, but they're working for DIT. So they've got to ambassador level in the Foreign Office, and they are working for us. You can imagine that where we have an ambassador as a DIT employee, that market is very significant, and it's very important to Britain. But where the ambassador might be, sometimes surprises. The last I heard was that we had the person who headed up our operation in Switzerland was at ambassador level. And the reason for that is that Switzerland has got the United Nations, it's got the scientific bases, it's got significant companies like the pharmaceuticals, it's got significant international entities like the FIFA, the football people, or sort of the Red Cross. And there's a whole range of reasons why Switzerland, a small country in the heart of Europe, is the center of the universe. And so we have an ambassador to look after the relationship there. But within our 1,200, we would recruit a third of civil servants, expats, but the other 2/3 are likely to be local recruited and appointed business people. In America, they come into our team and stay 2 or 3 years, and then they move on to better and greater things. One of the guys I worked with most in America, for example, got headhunted and became a professor at one of the top universities. So we lost him, and they usually stay about 2 to 3 years in our team. In the Far East, it's the exact opposite. We recruit people usually with at least 10 years of business experience, and very often they stay with us until they retire, become extremely loyal to British interests, and put in the hours and the dedication because they love the British way of doing things. And I would say, as an example, that's the situation I found in Japan and the Far East. Very, very reliable, but also in Turkey, very reliable. They join us, and they absolutely love the British way of doing things. So I've mentioned that they've come from the private sector. They are not, our recruits in DIT overseas are not civil servants. They are people who've come from commerce and industry, and they know how to get their hands dirty, but they work for us. Next slide, please. Advisor network, I've been a successful exporter. I've been around the world. My colleagues have got sort of exemplary sort of credentials. Some of them know, they've worked in countries like France. We've got people who speak languages. We've got one of my colleagues is French. We've got another one of my colleagues is German. We've got people from the Nordics and that. So we're a real mix, which have always ended up somehow or other working. I've taken trade missions to the Nordics. I'm half Norwegian, by the way. I've taken trade missions to the Nordics. I've taken trade missions to Africa. I've taken trade missions to Canada and the Middle East and the Far East. So I've got a big, that's working with DIT. Before that, my experience is pretty much anywhere you care to think. I've been in Russia and America and the Middle East and everywhere you can think of in Europe and the Far East. I've worked for months in Japan and stuff like that. Languages, we've got languages. We speak some languages. I speak some languages. We're practical people. So your problems become our problems. We own them. We try to sort them out. The clients I work with, you'd be amazed at the difficulties they sometimes get into. In a normal year, we would expect sort of some of our clients to have trouble with customs, to have trouble at the docks, with sort of regulations, with with difficult partners and so forth, and that with sales that need an extra little bit of push to get over the line. All of those things help. We help with market intelligence, knowing what's coming down, in advance is very helpful. Sometimes we anonymize companies to help them in a country so that they have the capability of doing their own research, they have the capability of doing their own infrastructure work and so forth. But if they work through us, it's anonymous. If you're working for the likes of the big oil companies, the prices usually go up when they come into town. So working through us can very often stop that happening. Next slide, please. These services change, and this would be in a normal year. So we help with trade shows. We have a process where we provide finance to the big trade associations to have a presence at the key sort of trade shows, the British Pavilion and so forth. Trade missions, I've mentioned, I've taken trade missions. Usually 10 companies go out to a country. So I took a trade mission out to Angola. It was, funnily enough, it was a non-oil trade mission. My predecessor had taken an oil one out there. So I went out there as a non-oil. We were there for a week. We traveled around the country, the 10 companies. We had various receptions. We met with some of the ministers in Angola. We met with some of the governors that are in the provinces of Angola. We came away with exports to the tune of about 20 million for the 10 companies. So that starts looking sort of a worthwhile exercise. Our guys on the ground keep their eyes and ears open for opportunities. They hear that there's a government spend on this or that, or a company is planning to open a new whatever it is they're doing, factory or sort of business opportunity. So that gives us a selling chance, and so we alert companies that are relevant to those opportunities. We open the doors to get you in. We're very, very good at opening doors. Overseas Market Introduction Service, this is in flux at the moment, but it's still available. It's the only easy way that our guys in overseas markets, in overseas countries, can charge for their work. So if you wanted to find a local distributor, that's something that they could do, and they would charge for that. They would charge to find. They would look through their networks, they would look through their contacts and try and identify an appropriate distributor for you. They do that very, very successfully. Events and seminars we do all the time as well. We are present in all the major stuff in each of the countries that we're in. So there will be a DIT, we may just visit, or we may have something more profound in those. So you can tap into all of that. Next slide, please. Now, in this, I work for a company that is under contract to DIT. So I'm not a civil servant. The company that I work for has the contract to provide support to companies that wish to export in the southeast, where I'm based, and also in the London area. As part of that contract, DIT asks us to do things. So we put on training, we put on webinars, we put on seminars. When this COVID thing's knocked on the head, we have networking events. We have what we call meet the buyer events, where we get real customers with real checkbooks coming over to the UK and prepared to splash the cash. I can remember sort of working with a meet the buyer event that brought Saudi Arabian businesses over to the UK, and these guys said, how often do you turn up at a meeting where everybody you meet can buy everything you sell? That's the sort of meeting you want to go to. So we do that. We research overseas markets. We do that. I do that. We've got various more intensive services that we offer. We add value to you exhibiting. So you might say, I go to 2 or 3 sort of overseas trade shows a year. Well, if you go with us, with our support, we put on some of the pre-show publicity. We do some networking events. We might have more business, a little bit of business support locally. So that could be translators. It could be, it just could be access to IT and stuff like that. So we're doing all of those masterclasses to help you. E-commerce, which I don't tend to sort of get too involved with, although I've got a few companies that are in that area, can be a very lucrative route in, and it's worth, so we run seminars to explain that. We use webinars, social media. We do, can we have, yeah, sorry. Social media, finance, I've mentioned. We do some startup type events. So doing business doing business. I've attended a webinar today that was doing business in Sweden. We also have, you know, how to sort of win business overseas workshops and so forth. So again, all aimed at helping companies at a variety of different experience levels. Next slide, please. There is a willingness to buy British products overseas. Britain is very visible internationally for a whole range of reasons, and companies remember their experience of Britain. Many purchasers, many of the people you find who want to buy came to the UK first for education. They got their degrees in the UK, or they worked for an overseas British company and they've got to know Britain. So there's a willingness to buy our products. The overriding command is get the price right, get the quality right, get the innovation right, and there are willing buyers for you out there. And we can help for each of your categories. So I've got support for new companies to exporting, never exported before. I've got support for companies that are exporting at the moment, but on a reactive way. Maybe they've had someone turn up at a British show and trade show and wanted to buy overseas. So that's a kind of reactive process. And then we've got experienced exporters where they've got a distribution network, they've got people on the ground, but they want to grow those markets or they want to move into new markets. So we can help those as well. Next slide. I mentioned that DIT works through agents in the region. So in the London region, these are the ways that we can help you. There's the contact details. We're on Twitter. We're on LinkedIn. We run a whole series of events. These are either free or they're at a very nominal cost. They're not prohibitive by any means, and they are very, very high quality. I can testify for that. Our events, we nearly always bring in external consultants who are world class. So well worth networking into that. Next slide, please. For the Southeast region, which is where I'm based, this is the same. You'll see that there's an overlap. So the London team and the Southeast team share events. We share obviously the government website. We share on Twitter and things like this. So there's a big overlap of support. There are 8 regions in the UK which cover the whole of the UK. So they are London, that's the Southeast, the Southwest. We've also got East and West Midlands, we've got Eastern, then we've got Northwest, Northeast and Northern. So there's 8 regions in England. And then we have the devolved regions which work slightly differently, and that's Wales, Scotland and Northern Ireland. So they report directly to DIT without a lot of interaction with the likes of me. Within the English regions, there's I know my opposite numbers in the other regions. I'm a specialist. I come from the oil and gas industry. I come from a technical background, but I look after. I'm very much a poacher turned gamekeeper. I look after the environment. So that's my sector. I'm a sector specialist in that area. Next slide, please. So that's my presentation. I've said to Mark that that you should be able to get the slides, and if anyone, wherever you are in your export process, whether you're new to exporting or have never exported, or whether you're very experienced, whether you're a small company, and I really mean you could be a very small company, a one-man show, or whether you are a very large company, there is something we can offer all of you. I have worked with companies that are in the top 10 of the FTSE, and I've got one company that is a one-man consultant. He actually sort of helps improve pig breeding. So he's a geneticist, but he goes out and he advises, and then UK agriculture benefits from each trip to the tune of several £million. So there's a range of people. We can help all of you. Thank you.
Thank you very much indeed, Terry. I thought that was great. And I'm really glad that everyone's had the opportunity to meet you, because it gives an opportunity for people to get to understand you. I'm a great fan of DIT, and I'm a great fan of exporting. There is a road that you have to travel, but I've always found it when I was working in boat building, then in composites, then in the oil and gas industry, that actually traveling that road with DIT, it takes some of the risk out of it, and it stops falling into pitfalls and can short circuit the whole process, because you talk to people who live on the ground day to day, understand the market, understand the business environment, and have a mine of information, and they're very open with their knowledge. And I think it's very reassuring when that happens. So, you know, I'm a great fan. And if members have queries, then they initially chat to me. I can then, you know, field those queries and push them in your direction, if that's all right, Terry.
Certainly, I'd be very pleased to help.
And thank you very much to Vicoma for the introduction to you, and to Paul. So thank you very much for that, because this would not have happened without them being free with that information. So I'm very grateful.
Thank you.
Thanks very much. Well, that now concludes our business briefing for this afternoon. Thank you for those who've joined. The recording will be up on the website sometime tomorrow, and I will cascade the details out. But for those I'd like to thank David of Paul Mead Accountants. I'd like to thank Emmy, Laura Lee, and Adam from Forest Brown, and to you, Terry, for your time this afternoon and for the wisdom that you've imparted. So thank you very much, and to everyone, have a very good evening. Goodbye.
Yeah, thank you. Goodbye.